Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, November 24th, 2008. The dollar was lower today against most of its major counterparts as global equities rallied, increasing risk appetite and diminishing the dollar's safety haven status. Also, the U.S. government laid out a plan over the weekend to rescue Citigroup, which helped calm financial markets. But first, we begin in Germany, where business confidence slumped to a 15-year low in November as weaker global activity hurt German exports and other sectors. The Business Climate Index dropped to 85.8 from 90.2 in October. Orders are declining, forcing companies to scale back production. The data puts extra pressure on the ECB to act by lowering interest rates another 75 basis points in their next meeting. In the Eurozone as a whole, industrial new orders fell 3.9% in September, a larger than expected decline, while August's orders were revised down to a negative 1.5% change. It is a reflection of weak demand for large capital goods and means that firms are not investing in large equipment in the face of the growing global slowdown. The euro-dollar pair hit a low near 1.2570 following the German Business Climate Report, but rallied strongly afterwards, rising almost 300 pips to the 1.2880 level. The U.S. announced on Sunday that they would be bailing out Citigroup with a $20 billion injection of capital and guarantees for around $300 billion worth of bad assets. The news was received well in global equity markets, which helped instill some risk appetite to currency markets while pressuring the dollar. The pound-dollar pair rose to 1.5175, a climb of 300 pips from its intraday low, reversing the decline seen late last week. The British government unveiled a £20 billion economic stimulus plan centered on the reduction of the sales tax to 15% from 17.5%. Stocks in London were up almost 10%, helping to boost the pound in late European session and during the New York trading session. The pound-yen pair surged as well, extending Friday's rally to more than 800 pips. The DJ Stoxx 600 index, a measure of overall European stocks, was up 8.4%, after hitting a fresh 5-year low on Friday. European markets reacted positively to a report that President-elect Barack Obama would nominate Federal Reserve President Timothy Geithner as Treasury Secretary and the plan by the U.S. government to rescue Citigroup. The euro and dollar were also up on the yen in today's trading. Another big gainer during this time of risk appetite was the Canadian dollar. Oil prices rose above $54 a barrel, and the Dow Jones Index climbed more than 300 points by noontime. With investor sentiment rebounding to start the week, the U.S. dollar-Canadian dollar plunged almost 500 pips in favor of the loonie, reversing the rapid climb seen last week that was fueled by sharp equity losses around the world. The pair then bounced off of support at 1.2240. In the U.S., existing home sales declined on the heels of a strong gain in September as uncertainty and economic concerns increased in October, according to the National Association of Realtors. Existing home sales fell 3.1% to a seasonally adjusted annual rate of 4.98 million, lower than expectations. The news, though weak for the housing sector, did not factor much into today's trading. Tonight, Australia releases its leading index, while Japan posts its corporate service price index, along with its monetary policy report. Overnight, Germany releases its consumer confidence, and the UK posts data on mortgage approvals and business investment. Tomorrow morning, the US releases its second release of GDP data, 2 measures of housing prices, and a report on consumer confidence, while Canada will post its retail sales for September. And that wraps up this Monday edition of our broadcast. Thank you for joining us, and happy trading.